Welcome to the first of our 3 stock picks videos for 2022. I'm Ollie Smith, and joining me to discuss 3 companies hit hard by the recent sell-off is Killik Co's Associate Investment Director, Rachel Winter. Rachel, let's start with stock number 1. Can we justifiably say Happy New Year to Orsted?
I don't think we can. It's had quite a sell-off so far this year. So as you said in your intro, we have seen quite a sell-off in growth stocks this year. So we're having a look at 3 that we think have fallen to attractive levels. The first of these is Orsted, which is a Danish wind company. It's actually been through quite an incredible transition. It used to be purely a fossil fuels company called Danish Oil and Gas, but it's now 100% focused on wind. It's now the global leader in offshore wind. Between 2016 and 2020, the company performed incredibly well, partly because the underlying company was doing well, but also because investors were so keen to invest in renewables. However, over the last year, the shares have lost almost half of their value, and we think that's quite unjustified. The underlying company is still doing incredibly well. The pipeline is looking very strong, and we believe the shares are looking relatively attractive at these levels.
Does that make it a bargain buy?
I wouldn't say it's a bargain buy. It's still not a cheap stock. The reason it's sold off, well, there are lots of different reasons, but one of the key reasons is the increasing amount of competition moving into the sector. But it's very much a growing sector because the whole world is looking to move into renewable power. So we still do think there's a lot of growth potential for Orsted here.
Fair. And who's next on our list of 3?
Next on the list, we have a Japanese company called Keyence. They are a leader in industrial automation. They focus on vision systems, which are systems that help machines to capture and to analyze visual data. And we believe that companies around the world will be keen to invest more in automation because of inflation. So as we have inflation going up, that will cause employees to demand higher wages, and that will encourage companies to invest more in automation so that they can lower their wage bill. So Keyence is a global leader, and we think it's very well positioned for this high inflation environment.
Startling. Okay, and then just finally, tell me about stock pick number 3, PayPal.
PayPal is a stock that we all know very well. It's very much been classified as a lockdown winner because so many people were forced to shop online during lockdown, and the shares have sold off very heavily since then. They're actually down about 40% since their peak, but we do think that people will continue to use PayPal as the world continues to open up. Firstly, people will continue to shop online, but also you can use PayPal in physical stores. And furthermore, PayPal is looking to add new features to its digital wallet. There are lots of new features coming out which should make it more attractive. For example, investment options, cryptocurrency, price monitoring. So we do believe that PayPal is well positioned for a more digital world going forward.
Brilliant. Rachel, thank you so much for contributing to this first 3 stock picks video for 2022. For more information and analysis of the sell-off, please check out morningstar.co.uk. Until next time, I've been Ollie Smith for Morningstar.